What's driving this right now? Is this still an AWS story, or is there something more to it?
I think it's the factoid about AWS in Andy Jassy's commentary that AWS is on a $100 billion run rate annually. It was a $90 billion business in 2023, and learning from Alphabet and also Microsoft's earnings prints, you have to give the street something, a figure that shows there is a tangible growth in that unit that's directly linked to generative AI, and that number seems to be doing the work in this after-hours session.
Talk to us about kind of what the strategy is here, because, I mean, we sort of talk about Amazon as kind of a retail business or maybe even a logistics business, but when you look at the growth of AWS and more importantly, what it's now contributing both in terms of to revenue and the bottom line, I mean, this is basically a cloud and AI company, or at least it seems to be morphing into that.
Exactly so. AWS is the clear market leader in cloud, bigger than Microsoft Azure, certainly bigger than Google's cloud platform. It's seeing accelerating growth. Growth in the fourth quarter was about 13%. It's now nearer to 14.5%, 15%. And the strategy is basically to be a place where other companies who are interested in AI can build whatever software it is they want on AWS's platforms. You know, the frustration from the street has been, why can't you show us this kind of shiny generative AI use case like Microsoft has done? Microsoft just took the OpenAI relationship and put AI into their existing software. And the street really liked that. With Amazon, they've resisted the urge to do that, a generative AI or chatbot tool, and basically said, we're a cloud company. Come to us if you want to build AI. And now it's showing up in the financials.
Hey, we're in conversation right now with Ed Ludlow, the co-host of Bloomberg Technology. I'm Romain Bostic here on The Close. Joining me right now to kind of help walk us through all the earnings that we're getting fast and furious is Sonali Basak. And Sonali, you saw the numbers here, and Ed's just talking about it here. This is still a growth story. It's just not one around retail, more around data centers and cloud and AI.
Yeah, and it's interesting to see the stock reaction here, Romain, even with that estimated guidance here falling below where they're actually guiding. You know, Ed, how do you think about this moving forward? What are investors reacting to? The idea of a future promise of a potential dividend, given they didn't hand it over today, is the idea here that they're making just so much cash that one day they could hand it back, maybe, or that investors would rather Amazon be putting their money to work?
I'm smiling because buybacks and dividends are in vogue, you know, for the technology sector. And a big part of that has been, at least you could argue, that they don't really know what to do with their cash. You know, making a big acquisition is pretty tricky, particularly in North America right now. You know, Amazon is going to have to show us something they've not put in the earnings statement, and that is capital expenditures. It's all well and good to say cloud's growing, and it's growing thanks to AI. But we know from Meta's example, the data center spend is going to be really heavy. The story for AWS has changed quite dramatically. Like end of 22, beginning of 23, cloud customers were pulling back. They wanted cheaper alternatives from their cloud providers. Now it's all in on AI, but you have to see the companies invest in the infrastructure. You know, look at the earnings release, Control F on your Bloomberg and look for the words capital expenditure. They're not there beyond that one single reference to the $10 billion specific project that they outlined. So that's going to be something to listen out for on the calls.
Until this point, you did not see the same stock price reaction in Amazon throughout the year as you did in Meta, which of course did react really negatively to that extra spend. But for Amazon, given that they didn't see the same run up this year, if they do have a large number in CapEx, would they still be able to have a bit of a lift here in their stock price, given they didn't see the same kind of rise earlier this year?
Yeah, different investors want to see different priorities. You know, since Andy Jassy has come in as CEO in the last couple of years in particular, it has been a story about belt tightening and focusing on margins. There was this kind of all-in emphasis on speed, particularly on the retail business or Amazon.com, right, in the early days of the pandemic. And Andy Jassy, in the first instance, had to unwind a lot of that, focus on profitability. Similar story with cloud, where Andy Jassy's origin story comes from. That's where he was before he was CEO. It's very similar. You know, some investors want to say, show us the money, like really invest in this, capture the market. And others want discipline. And getting it right, as we learned in Meta's case, is really tricky. You're damned if you do and you're damned if you don't.